Is there anything less sexy than talking about your credit report? It is a reminder of all the financial mistakes that you have made in your past, right there, all organized and categorized in a few pages. So that means that Express credit card that you got when you were 18 with a $250 credit limit that you never paid off might still be affecting you today when you go apply for a car loan. It could get you denied the loan altogether or cost you a few thousand extra dollars in interest. This is why understanding and maintaining your credit is so important. In today's video, I will go over the basics of your credit report. Make sure you come back next Thursday when we go deeper into your credit report and we go over practical things you should do to make sure your credit is the best that it can be. But if this is your first time here, welcome to Financial Wisdom with Anna G. I'm Anna G. I post every Thursday a new video and a new blog in English and Spanish on practical personal financial education to help you achieve financial wisdom. Don't forget to subscribe and turn that notification bell on. First, a little bit of background. How did we get to where we're at today when it comes to credit? Back in the early 1900s, okay, no, I'm just kidding. But if you know me, you know I hate history. Okay, so back in the 1900s, consumers, aka you and I, would go to a local bank and put in an application for a loan. At that time, there wasn't one set way of deciding who was approved and who wasn't. The creditor could decide if you got the loan based on your class, gender, and race, or really anything else. Maybe you walked in with the same scent as his ex-wife, or he didn't like the way you tied your tie. The system was unfair, inconsistent, and not based on facts. As more people started trying to acquire things through loans, it became clear that there needed to be a more uniformed and fair way to do this. Companies started to collect financial data on consumers, but there was still information in there that could negatively affect consumers and lead back to prejudice. This included things like political and social information. Enter the Fair Credit Reporting Act, also known as the FCRA, which was passed in 1970. This law made it clear who can access your credit information, what information they can collect, and for how long they can keep it. For us as consumers, it also outlines some of our entitlements, such as being able to verify the accuracy of Bureau's report when it's required for employment purposes, receiving notification if information in a Bureau's file has been used against you in applying for credit or other transactions. You can dispute and have the Bureau correct information in the report that is incomplete or inaccurate. And you have the right to remove outdated, negative information after 7 years in most cases and 10 years for bankruptcy. If the Credit Bureau fails to respond to any of your requests in a satisfactory manner, you can file a complaint with the Federal Consumer Financial Protection Bureau. And the one thing that is on the FCRA you should exercise the most often is that you are allowed, by law, one free credit report each year from each of the 3 credit reporting agencies. A lot of people don't know this. It is one from each credit agency per year. Simply go to annualcreditreport.com, scroll down until you see Request Your Free Credit Reports. Then click on Request Free Credit Reports and fill out the form. Next, you will have to answer some questions to verify your identity with information that will be in your credit report, such as past addresses, name of lenders you have used in the past, or aliases that are on your credit report. Once you have been verified, you will pick which agency you want the report for: Transunion, Equifax, or Experian. Make sure you only click on one. You can pick all 3, but trust me, pick only one. Doesn't matter which one. Because then in 4 months, you will do this again and choose a different agency, and 4 months after that, you do it one more time with the last agency. Now you have obtained your free credit report over a year's time. Actually, now through April 2021, on this same website, all 3 credit agencies are offering free weekly online credit reports so you can manage your credit during the COVID-19 pandemic. Once you have downloaded your credit report, you are going to want to look at your information: name, addresses, social security numbers, accounts, and loans to make sure all the information is correct. Then check that the other information is accurate and complete. If you find something wrong, contact the business that issued the account or the credit reporting company that issued the report. Get familiar with your credit report, and every quarter when you look at it, you will be able to quickly find errors or new information. It is nice to pay a company to monitor your credit, but you are the only one that is really affected by your credit report. So no one can do a better job at monitoring and detecting discrepancies in your report than you. If you are paying a company to get a copy of your credit report and monitor your credit, some of which can cost up to $50 a month, go ahead and cancel it today. There are too many ways to get your free credit report. Save that $25 to $50 a month and put it towards your emergency fund or a financial goal. If you invest that money in a place that gives you a 7% average return for the next 10 years, you will have put in $3,600 and have made $1,532 in interest for a total of $5,133. Your money making you money. Not bad for taking $30 that you are already spending every month and reallocating it. Small steps lead to big changes, right? I will tell you though, that when you download the credit report, it will not have your credit score. It will not have your credit score. I know, it doesn't make any type of sense to me either. To get your credit score, you can go through your credit card companies, your financial institution, or free credit scoring sites like Credit Karma, which is what I use. It's a free service. Simply download the app, verify your identity, and you will have access to your report every single day. In case you're wondering, every time you check your credit score with these apps, it is categorized as a soft inquiry. So no, every time you look at it, it won't affect your score. I have provided some links below if you would like to download any of these apps. As of 1989, there still wasn't a uniform way for the three major credit bureaus to analyze a consumer's financial information. The Fico Score was invented by Fair Isaac Corporation, hence the name FICO, providing a universal and impartial tool for evaluating consumers' credit risk. This changed the whole game because rather than one person's biased opinion on the color of your skin or what side of the tracks you lived on, FICO evaluated consumers on their ability to repay a loan. To this day, FICO is used by 90% of the market. There's also Vantage Score, which was created by the three credit bureaus in 2006 and is used by about 10% of the market, but steadily increasing. Both analyze information to give you a credit score, but they both use slightly different criteria to determine your score. This is why you can see a different score on different credit reports. It depends on which model is being used, but in general, your credit score will be pretty close. Let's also talk a little about the main three credit bureaus: Equifax, Transunion, and Experian. They compete to capture, update, and store credit history on most consumer financial information. The information in the report is used to compute consumers' credit scores, which can affect, for example, the interest that you're going to pay on money that you borrow. All three of these agencies are independent. They aren't owned by the government, so this means that they have their own way of doing business. Even though they collect the same information, each one processes it in different ways. One of the main differences is that not all lenders report information to all three of them. That's why information such as your credit score, late payments, and inquiries might be different if you're looking at different reports. For example, I compare my Transunion report with my Equifax report on Credit Karma, and one shows 2 more hard inquiries than the other. I already talked about a soft inquiry, which doesn't affect your credit score. A hard inquiry is when you apply for a credit card or a loan and the lender has requested a copy of your credit report to make a determination. This does affect your credit score. Another difference that I saw is that on one, my credit limit is $9,000 higher than on the other one. Even so, with these two differences, there is only a 3-point difference between the two. So like I said, different changes, but not a lot of change within your credit score. I've mentioned credit score, but let me go into it a little bit more. Simply put, your credit score is a 3-digit number that tells lenders how likely you are to repay your loans on time based on what you have done in the past. Most models have a range between 300 and 850. Your credit score looks at payment history, how long you have had credit, and the amount of debt that you have. The higher the score, the more likely that you will make your payments on time. But it's really not that simple because, like I said before, some lenders use the Fico Score, others use Vantage, and then each credit bureau also has their model to integrate into it. All you and I need to know is that as long as you are making your payments on time and you're taking care of the 5 main factors, which I will talk about next week, your credit score will be relatively close no matter which model is used. So what is considered a good credit score? On the FICO scale, a good credit score is 703 and a 680 for Vantage. But remember, you don't only have one credit score. You will have different credit scores depending on the credit bureau and which scoring model they are using. But regardless of these variances, all of them give lenders a general idea of you as a credit risk. As you can see, there isn't a huge difference in score between the 3 different credit bureaus. Your goal is to get your score above a 670 so you can get the best offers, which will save you money. Anything under that and you will have difficulty getting approved or will end up paying more in interest or security deposits. Unless you're one of those people that can pay cash for everything, you can't get away from your credit score affecting you. Even then, cell phone companies, utility companies, landlords, and home and car insurance companies also use your credit score to determine if they will provide you service and in some cases, how much of a security deposit they will require from you. Most major financial decisions will likely involve your credit score. Buying a house, a car, starting a business, getting a student loan. In order to get the best offers, you have to have a good credit score. There are other factors that lenders take into consideration, such as employment history, income, and your personal assets. So keep that in mind. It's not just about your credit report, but a credit report is a big factor. Over the course of your life, a bad credit score can cost you hundreds of thousands of dollars. A person with a 620 credit score would pay $65,000 more on a $200,000 mortgage than someone with a 760 score or $5,000 more on a $30,000 loan. Between those two, that is $70,000. Your credit score can help you get some really good interest rates or cause you to be disapproved or pay much higher interest rates over time. Your credit score is very important. Now that you have a basic understanding of your credit report, go ahead and download your free credit report at annualcreditreport.com if you haven't done so already. Look it over and see if there's anything that is wrong or inaccurate and work on getting those things fixed. Whew! This video is probably gonna end up being one of the longest videos I've ever done. But your credit is so important when it comes to your financial wellness, and there is so much to know about that I wasn't able to put everything in this video without making it like an hour long. In next week's video, we're going to get even deeper into your credit. I will explain things that affect your credit score and different things you can do to improve it. You don't want to miss it. Make sure you don't just take the information that I gave you and do nothing with it though. I have given you practical things that you can do today, and I will have plenty more next week. Happy Thursday, and to your finances.